So I think my microphone was on mute, and everything I said was not recorded. But I was doing some live trading. I bought some Micron calls. I bought some Marvell calls. And I was talking about how I think that um, we don't know if this whole deal with Iran is a real legit end to the war, or is something else going to change. And are we actually going to end this war? Is something that is just kind of hearsay? And for the past 2 months, I've thought that the war in Iran was going to end like at this point like 20 times already. So now you're looking at the market, you can see that you're having a huge move in stocks. Crypto goes up. Uh, Interest rates are down. Volatility's down. The VIX is down. And crude oil is down a lot, down over 5%. So the tape action as a whole all reflect the fact that there actually is going to be an end to this war. And it actually is going to end. So that's what the tape action reflects at this point. However, in the past couple of weeks, we've seen that, it's constant, constant back and forth with what people say. So I don't know exactly how this is all going to turn out, but the key thing to understand is that today's tape action reflects the fact that there actually is an end to the war that is going to come. And not only an end to the war, they're going to actually open up the Strait of Hormuz. So there will be a real legit end to the war that gives a opening that allows the Strait of Hormuz to be open and stay open, and it will allow oil to go through the Strait of Hormuz. And that's what the tape action today is. That was good. What is reflected, because the main thing with this war in Iran, it's the actual war element. You could argue is actually bullish. I mean, it's bullish for many companies, rocket companies, defense companies, all this stuff. There's nothing on a pure war front that is very bearish. What's bearish for the market is the fact that Iran has had this stranglehold on the control of the Strait of Hormuz, and has been able to use that as leverage for the war against the United States. And the fact that oil has not been able to get through the Strait of Hormuz, that adds to inflationary pressures and adds to this element of the this whole element of inflation ripping through the system, and that is going to hurt the consumer and slow down the economy worldwide. And that whole bearish narrative is what has governed the entire down move. When you see that down move in stocks, when you hear any news from the closure of the Strait of Hormuz and so forth. But this tape action today is very, very bullish. And as I'm speaking, I'm looking to add to SpaceX. My original cost basis is at $167 a share, and I'm looking to add. The stock pulled back from $175 a share at the opening
and now is at about 173 a share. I'm looking for a place to add, but I'm still watching it. I still don't know. I still don't know if I'm ready to buy SpaceX right here, right at 173. I think it traded to 175. So if it goes above 175, I may have to chase it right there. But right at 172, I think I'm still in the zone where I'm going to watch it and wait for it to come down towards closer to 167, where my cost basis is. Now, the low of the day for SpaceX is 168. So that could be a place to add to SpaceX. If it goes down to 168, $168.25 a share, and just look to buy it right at that price. There's tons of stocks that are ripping up today. Big gains across the board. Robinhood, Reddit, Micron, Western Digital's up over 15%. Huge move for Western Digital. And as I said, another stock in that sector, Micron, is up over 8%. AMD's up over 8%. Huge move in AMD. Let's see what else we have. We have CCJ. Cameco's up over 5%. Let's see what other big moves. Astera Labs is up over 4.7%. AppLovin is up 4.9%. Corning's up over 5% on the day. Marvell was up over 5% on the day. So there's lots of big moves on the day in various names. SanDisk is up over 4% on the day. So Broadcom's up 3.5%. Not as much as the other names, but still a good move. NVIDIA's up over 2% on the day. That's a solid move for NVIDIA at $209 a share. So you just get big moves across the board. And the one stock that I just recently added to that's had a nice move is Eli Lilly, and it's down about 1.5% on the day. Just down close to $17 on the day. Still above $1,100 a share, but down about 1.5% on the day. And that stock has had a huge move over the past couple of days, so that sticks out to me. I actually want to maybe add more to Eli Lilly. Over the weekend, I sold Berkshire Hathaway. I sold it by getting called away in stock and options. So I sold calls in Berkshire, like I usually do, but this time I got called away in selling those contracts and selling those calls in Berkshire Hathaway, and I got called away over the weekend. So I have a bunch of cash available to deploy, and as the market is ripping up the way it is, I, as you can see, looking at these watch lists and looking at these charts, as you see the way the market is ripping up the way it is, I am very inclined to, in this type of market, to look to buy shares of stock. And I'm more inclined to buy shares of stock if we have a big sell-off, a big pullback in the market. But because the market is so extended the way it is, and the way it's moving parabolically the way it is, I'm more inclined to buy call options in various stocks. At this point, I think it's best to buy call options because you can be exposed to the stock and have a limited amount that you can lose when you buy that call option, and then also be able to participate in the move up in the individual underlying that you buy the call in. So that makes me most inclined to buy calls with the way the market is extended the way it is. And if the market sells off, you can then cut the cord, cut your losses in the call, and have a minimal exposure to the downside with the loss of those calls, because you can only lose so much in the calls, and then you can, let the market sell off, and then look to buy shares after that, after you sell the calls. If the market keeps going up, you can roll up those calls and stay in a position, or take profits and reassess yourself. So with this type of market, buying at the money or in the money call options, I think is a great way to get exposure to this market. Because I mean, we get a couple days of downside move, right here, you can see it. You get just a little bit of move to the downside, and bam, we are back ripping higher. It is crazy. And there's just tons of stocks that are just moving up. I'm going to switch my screen so that I'm sharing. Let's take a look at. I'm going to share my other screen here. As we can see here, take a look at the stock in the quarter. We have SpaceX trading right there at 174 a share. Then you can see the indices move. You can see charts in the indices, but I just want to make it very clear that I am looking to buy some SpaceX, add to my SpaceX. So I want to add to SpaceX shares, but I don't know. I'm just kind of waiting to see what it does. My cost basis is 167, so I want to, if I can, try to add to SpaceX closer to $167 a share, but that may not happen. You just get a nice bid right here, right at 173, and high for SpaceX for the day is right at 175. So if it trades above 175, I may just go in and buy some more shares. Hold up, we'll see. And they are doing construction on my building, so I may have to mute the audio here while they drill away on the outside of my building. Hey everyone, I am back. They are doing construction on my building, so I can turn on the audio intermittently, and I may turn on the microphone, camera later today. But just checking in here. This market is to me. I was just texting with a friend of mine. He was saying how he's skeptical of the market and he thinks that it could like roll back over and come down. I told him just my 2 cents just by looking at the tape action that there's a lot of gusto, and I use that term kind of loosely. It's my own term that I use, but I see a lot of gusto in the tape action. The one thing that sticks out, and you can see it on the screen that I'm sharing, is the way that the Russell is selling off. It was much higher. It got up to 3,025 early this morning, and now it's at 2,997. It's really given up a lot of its gains, and it's actually down. It's still up on the day, but it's down from where it was. Um, but as you take a look at all the different symbols on my screen here, you've got the Nasdaq up 2.5%, the S&P up 1.5%, the Russell's still up on the day, up 1%. Okay, the bonds are up, which means the interest rates are falling. That's very, very bullish. And crude oil's down over 5% on the day. Down 5.6% on the day. That's all very, very bullish tape action to me. And they're starting to drill again. And so I'm gonna turn off the microphone right now. Now, as I said, we have construction on my building, and so I have to be intermittent. You know, just like come in, say some stuff, and then go back off when the drilling starts. But one thing for everyone to know: these construction workers take the longest lunch I have ever seen in my entire life. They take the longest lunch. They will. They will take an hour and a half to 2 hour lunch break. So right around 11:30, I can come on and talk for a good at least an hour, maybe an hour and a half to 2 hours without any disruption. So I will try to come on after that time and talk, and I'll turn on the camera and discuss some stuff. But these guys take a long lunch break. Trust me. But right now they kind of paused the drilling. Um, but you know, as far as the market is concerned, uh, is there anything else? I'm trying to find. You know, I keep watching that SpaceX. I keep watching that SpaceX. Keep watching that SpaceX stock, and as you can see here, the stock is trading right around $170 a share, and you know as long as it's above 175 a share, I'm not going to buy it. And the drilling is beginning again, but with SpaceX below $175 a share at this point, I'm not going to look to buy more shares of the stock. Under $175 a share, I'm still going to look to buy shares right at 167 to $168 a share, which is very close to what my cost basis is. And that's why that's a key level that I'm looking to buy it at, is 167. Now, for the day, the SpaceX low is around $168.25 a share. So that is a new level that I'll look to buy shares. That's above my cost basis. Okie dokie, everyone. I am back. Sorry for earlier if there was any noise with the construction from my building. But these construction workers, as I mentioned earlier, they take the longest lunch break I have ever seen heard of in my entire life. And it's nuts. I don't know. It's like they take like a 2-hour lunch break, which kind of works out good for me. Because I can. I've got an hour and a half to 2-hour window where I can come on and talk about the markets. So, as we're taking a look here at SpaceX, and so far today, the stock has pretty much opened higher from where it closed on Friday. So you can see it closed at $161 a share. And it is now trading at $173 right now. Just checking my volume here. So I'm looking to add. I've talked about this a little earlier today. I'm looking to add to my SpaceX position. I have a small position in stock, as they have not yet started trading options. That begins tomorrow, and I like the fact that it's not like starting to just break out to the upside and just run up straight up non-stop to the upside, because I do think that this stock has potential to go on a GameStop type of run. The only thing is that it needs to happen when the stock begins to trade options, and the options start trading tomorrow. As you can see, when I look at the trade tab, it has no options. The stock is not trading any options yet. So, the stock gapped up today and tested the $175 level, and now it's just been trading sideways. And I think that's good that it's not moving up too much or down too much. It's kind of found like a equilibrium point between the buyers and the sellers at this point. Now, when the stock starts trading options tomorrow, I want to see tomorrow when the options are trading that the retail investor comes in and is bullish and buys those call options to push the stock higher. And because SpaceX is a new issue, it's very possible, and I'm not saying it's going to happen, but it's very possible that the market makers can only hedge SpaceX with SpaceX. So if the retail investors come in when the options are trading tomorrow and start bidding up those calls, the market makers are going to have to buy, they're going to have to sell those calls to the retail customer, and then have to hedge those calls by buying more and more and more stock in SpaceX. And if that dynamic kicks in tomorrow, we could get a big move in SpaceX tomorrow. So the fact that it's trading sideways today, and if the gamma squeeze starts to kick in tomorrow, and you can have today's sideways action as a what's the term? As a kind of like a base default type of tape action to compare it to. So if you get a lot of big upward movement, breakout up move in SpaceX tomorrow, you can compare it to today's kind of sideways quiet action, and you'll know that if that big move is happening tomorrow when the options are trading, it will confirm that the options are part of the dynamic of the up move if we have that tomorrow, and you can go in with confidence to buy those calls and just ride with it. Now, I think for individuals that have smaller accounts, I don't necessarily think that you should buy calls because the volatilities are going to be very, very high, and if you don't have experience in how to handle call options, and when you have these call options that you're trading have high implied volatility, you're not necessarily going to make as much money as you think. Now, you'll have the sensational stories online by scammers saying, "Oh, I bought these calls and they made all this money, blah, blah, blah." In reality, it's better just to buy the stock and own the stock and let the gamma squeeze happen. That's how you make the most money, because you won't have time decay going against you. And the way the options could push up the stock higher, you could get easily a double or a triple or a quadruple in the stock in a very short period of time. You may think, oh, if the stock goes up 300%, if I buy options, they're going to be up 1,000% or 2,000% or 3,000%. No, that's not the case. Okay, the options may even be up less than the stock because of the time decay and the volatility involved with the option. It makes it a much, much more difficult to make money in the option, especially if you're buying way out of the money options. So if the gamma squeeze is taking place, specifically if you have a smaller account or are inexperienced in trading options, just buy the stock. Please, just buy the stock. There's so many people out there that think they have to get into the options and have to be sophisticated and make money so quick. No, just buy the stock, please. You're not going to make as much money as you think you are. Trust me. Trust me on that. I know you don't want to hear it, but that's how it's going to play out. So I am trying to order some food right now. So, as far as myself in adding to shares of SpaceX, what I am doing is I'm either looking for the stock to break out above $175 a share or come back down towards $168 a share. Now, my original cost basis was right at 167, so in a perfect world, I'd wait for the stock to come down to 167. But the way it's bounced off of this level right around 168 to $169 a share, that technical standpoint, that's technical price action right there at 168, and it almost came down to that level later in the day to 169. That level is a more of a better price to buy the stock at this point. So that is what I'm looking at with SpaceX. As far as the general market is concerned, we had news that there is a deal with Iran, and the market opened up on Sunday night, had a nice gap up higher. Now, some of this gap up higher was due to the contract roll, which is very complicated, and I don't necessarily want to go into it, but basically we're at a roll point where one futures contract expires this week and another futures contract begins trading, becomes the main active contract. So there's a lot of this volume is the roll where they're selling this futures contract and buying this futures contract as this futures contract is about to expire, and this futures contract is now the active contract. And you can see that in the chart where this futures contract, the September contract, and I'm looking at the NASDAQ, but we can also look at the S&P, is it used to load so fast back in the day. Now it takes time to load. It's crazy. Since Schwab took over. But this futures contract that expires in just 3 days is at 75.72 for the S&P. And this futures contract that is the new active contract that expires in 95 days is at 76.37. So you had a big move last night because of the news from Iran. However, when you look at the chart, it looks like it's a big, gap up. Part of that is the roll from one contract to the other. And so you kind of have to just adjust for it. And that's what happens when you go from one contract to the next. The contract further out in time can trade at a premium than the current contract, and that is what is called contango. And that is where the futures contracts for the S&P 500 and the NASDAQ factor in this extra premium that is the interest rate on that futures contract. This is all very complicated stuff. I don't know if it's we have time for it today, but I'm just saying that there is a gap up and there is a roll from one contract to the other. But regardless of that, if we zoom in to where we started trading on Sunday night and just look at the action for the current trading session, this is a bona fide trend session. And as you can see here, this is why I like to look at the futures contracts. If you're just looking at the SPY, it can show you a much more difficult not difficult.
a much more different picture
Than when you're looking at
the futures contracts.
Okay, so we're looking at the S&P 500 futures contracts for the entire session that began last night on Sunday evening. And as you see here, it's very clear when you look at this how you have some periods of consolidation and sideways action. But for the most part, all throughout the night and into the regular trading session today, it is very clear that we're going higher and making higher highs and higher lows. And it is a trend day, okay? It's a trend day, it's a trend session, it's a trend everything. This is a trend market, okay? And the way you have to trade this market when you have a trend day like today is get on board, buy the dips, don't look to short sell a session like this. If you look to sell these rips, okay, and look for a mean reversion in the market, you're going to get your head ripped off. When people learn about a strategy and they don't factor in the type of trading session, the type of trading day that it is, they get very confused because when you have a sideways range type of market, a lot of trading strategies work very well. But then when you get a trend session like we have today that began overnight with the gap up on the news from the Iran war, you could have a trading strategy that's based on mean reversion that's working very, very well, and then you get a trend day like today, and you lose all the money that you may have made for many, many sessions. And you can become very discouraged about the market and trading because you just don't understand that your trading strategy only works in one type of context, which is a mean reversion, sideways trading type of day, sideways trading type of market. And in a trend day like today, it gets run over. Now, as you can see here, it doesn't take a rocket scientist when you're looking at this chart to say, okay, it's in an upward trend, it's going up, that's a trend market. Now, when we take a look at the SPY, I want to point this out, and this is a perfect example why I like to look at the futures contracts and I don't look necessarily at just the SPY or the QQQ. When we take a look at the SPY for this session, for this trading session, okay, this is a 2-minute chart here, and we zoom in just to this session here. When you look at this, if you looked at this chart here, where it only goes back to 9:30 when the market opened, you could have easily made the conclusion right around 10 o'clock, 10:10, 10:20, that this is a sideways trading market, okay? And you could have traded from a mean reversion type of approach and tried to short a market like this. But because you did not look at the overnight extended hours trading that you can see when you look at the futures, you would have missed out on this fact that we are in a trend day. And as the day has progressed, as we're going into the middle of the trading session, you can now clearly see that it is a trend day to the upside. But early in the morning, just looking at this first hour or so of trading, you got the initial gap up on the trend day, and then you got what is very, very normal in a trend day, where at a certain point after the opening bell, sometimes it's at like 9:45, Sometimes it's at 10 o'clock in the morning Eastern time. Sometimes it comes later, like 10:30 in the morning, or sometimes even 11 o'clock in the morning. You get this pullback consolidation action, okay? And that's what this was. That was that pullback. And that happened right at 10:04 is when it started. That is normal in the trend day model, okay? You get this initial pump up, then you get the consolidation, and then you have another push up, and which we've had, and now we're at the point as it's 11:52 in the morning, as we're getting close to the noon hour, and we're past the regular trading session for the European markets. Well, we should try to get some back and forth sideways action, and then get another move later in the afternoon. That is the normal trend day model. And this, if you're just looking at the ETF SPY and you don't look at the futures during the overnight session and in the pre-market session, you're missing out on everything that happened here. And you're not realizing that it's a trend day, and the way to approach a day like today is to buy every dip and play the market to the upside. Because if we go back and look at the S&P futures, you can clearly see that this market has been ripping higher ever since. And you can see it very, very clear on the charts as well. That this market is, in a trend up day. And if you try to short a market like this, you're going to be, taken to the woodshed. And I have seen traders that develop strategies that don't put the type of day and the type of market into context, and they just learn one strategy that's based on one type of market or one type of trading day. And when when it's not that type of market, when it's not that type of day that they learned, they get taken to the woodshed and they lose a bunch of money. And they go from being very active about talking with the markets to you never hear from them again. They disappear. It's weird. Kind of interesting too. They just disappear. So the fact that it is a trend day today, and everything's ripping up to the upside. Let's go through a few stocks that I really like right now. Today I bought some call options in Robinhood, and on that initial pullback that it had after the opening bell, I bought some calls there. Let's see here. Looking at my positions. I bought the '98 strike calls that expire in June 26th. And those calls are up by, when I bought them, I purchased them for $4.95, so they're up 24% since I bought them, but they're up like over 100% on the day. So I'm up on the trade, but not up as much as I could have been if I bought it sooner. And so that was one trade I made. The other trade that I made was I bought some Micron calls the stock just keeps going up and up and up and up and up and up and up. And after it's done going up, it goes up some more. So I bought some more calls in Micron, and calls that I bought were the 1,075 strike calls. Since I bought them, they are pretty much unchanged, down by about 1%. Okay, I bought my net cost basis was $91.82 per contract. It's a lot for one contract, right? So I have calls that I sold against it as well. But those calls that I sold are in a further strike out in time. Those calls that I sold are the 1740 calls, and I sold those, and they have a 1740 expiration strike. They had their expiration in August, and I bought the Micron calls at the 1,075 strike against them. So that trade is pretty much unchanged right now. I'm long the 1,075 strike calls, and I'm short in the August 1740 calls. And the calls that I'm long expire in June. So it's a type of diagonal call spread where I'm buying the calls that have shorter expiration and selling the calls way out of the money that have a further out expiration to help pay for the calls that I bought. I'm also long the stock as well, so it's tricky. And the calls that I sold were actually essentially at first covered calls, but now I've turned those covered calls into a call spread, and now I don't own, essentially, because the calls that I sold are now tied to the calls that I bought. I don't essentially have covered calls on anymore, and I'm just long the stock. Over the past week, like a week ago when the market sold off, I had a lot of covered calls and I bought a lot of them back. I still have a few covered calls in my portfolio, some in Apple, some in Caterpillar, and I had some covered calls in Robinhood, which are getting beaten today. I actually have to deal with those. Okay, so those covered calls that I sold in Robinhood are now losing a lot of money. I have to, even though I'm long the stock and long the calls that I own, the short calls that I sold, they're getting taken to the woodshed today. So I have to roll those calls. Because they're starting to, as the stock goes up and those calls go up higher and higher, those short calls that I sold are taking away more and more of my profits. So I have to buy those calls back. So they're August 125 calls that I sold. They have 67 days expiration, and I am going to buy those calls back, and I'm going to sell another new set of calls in Robinhood, but I'm going to sell them out in September. Okay, and I like to sell these calls way out in time, but also far out in delta. Okay, so I'm looking at the 180 or 175 calls. I like the 180 calls. Those low delta calls, like 6, 7, 8, 9, 10 delta calls that have like close to 100 days to expiration, they have so much extrinsic value that they decay a lot faster. So I like to do that, and I'm buying back the calls that have 67 days to expiration, and I'm selling new ones that have 95 days to expiration, and they're much further out in delta. That have lots of vega decay, is what they call it, where they're all extrinsic time value, and as the volatility comes in, those options decay much quicker than most people think they do. So I am now going to roll basically buying back the 125 August calls in Robinhood and selling to open new September 180 calls. And I am going to have to do that and pay a debit. So thank God I'm making money in the stock and in the calls that I own. And because I have to do this roll for a debit. So I did that. Sold new calls. So even when I'm selling the new calls, I'm still paying the debit because of the calls that I sold before. I have to buy them back for a loss. But all that's okay. You know, if you're making money in the stock, you're making money in the calls that you own. One part of the trade is going to lose money, and it's just how it is. So you have, when you're trading options and stock together, you have to think multi-dimensionally about different positions, and you have to think about the option itself, the position as a whole with the options, the various options, and then how it fits into your entire portfolio. And that's stuff that's very, very complex. That I can talk about like on a live trading like today, because I'm just talking about like what's going on through my mind as I'm looking at the market, which is I think what people want me to do. Okay, so I did buy some calls in Micron. Sorry, not I did. I did buy some calls in Micron. I also bought some calls in Marvell. Let's take a look at Marvell. This data is going. It is when I do the recent scans that I've done in various stocks, Marvell sticks out to me. I like it. Okay? And so with the market extended the way it is, I just bought the calls in Marvell. And I don't own any shares, but I just love its tape action. I love its fundamentals. It has accelerating earnings, accelerating revenue, accelerating margins. It has a great story behind it, in fact, in how that they're making the TPUs for Google and Amazon and so forth. So I love all that. And so when you have a great story and then you have fantastic fundamentals behind it, and then you have fantastic tape action behind it, the market's validating what my research shows, and the story behind it kind of makes sense with what you're seeing in the tape action and seeing in the fundamentals. That's all like confirmation on top of confirmation on top of confirmation. I love that stuff, and I'm talking myself into having to take a deep breath. Breathe, Bradley, breathe. And relax before I buy another call. Yes. I had a date on Friday night. I went out with this chick. She was a giant, man. This girl was like 5'11", and she was wearing heels, so she was like 6'2". She was a giant. It was awesome. I love that. I haven't gone out with a super, super, super tall woman in a long time. And she showed up to the date drunk. Nothing happened. I just kissed her. That's it. But you know, there's some crazy women out there. They make it really easy. You know, I like it when a girl shows up to the date drunk. Makes it easier for me. But I am a gentleman, and I didn't do anything. But man, and when she was on the date, she went and continued on to drink 3 more like alcoholic drinks. Now, I'm not 100% positive that she was actually like drinking before she showed up and was drunk, but she just seemed like it. But then she had like, 3 more drinks and, ugh, I don't know. Just crazy. And I'm somebody that doesn't drink any alcohol, so I don't know how to relate. I guess the best way to go is just like go and show up and don't say anything, and just kind of let everything play out, and don't do anything too stupid. Don't say anything off color or too stupid, and just kind of let things play out. Oh, here's another drink. Here's another alcoholic beverage. Yes, you should have this. You should have that. you know, Make sure she doesn't, fall over. Because she's had the heels on. She's a giant. She's like 5'11", 6 foot. And then she has the heels on top of that. And she's drinking like pounding alcohol. So just don't say anything. My thinking is just next time I see her, don't say anything stupid and just go, yep, that's right. You look beautiful tonight, honey. And stuff like that. And just keep giving her alcohol and making sure she doesn't fall over if she's walking on the heels. That's how I'm going about the second date, I think. Because I'm assuming on the second date she's going to be, drinking tons of alcohol as well. If I decide to go out with her again, I don't know. So, back to Marvell. It is running up. So as I look at the tape action, it's running up, and I have the 290 calls. I am going to roll up the 290 calls. So basically what I'm going to do in Marvell is the calls that I have are these 290 strike calls, and I'm going to basically sell these to close them, and then I'm going to buy the 297.50 calls, which are a little bit more expensive. And since I want to add to the position, I'll roll, instead of just buying another 290 call, I'll basically buy the 297.50 call, and I'll sell this, the 290 call, buy the 297.50 call, and then buy another one on top of that. So I am doing that roll right now. So I'm selling one of the 290 calls and buying 2 of the 297.50 calls. Same expiration, 26th of June. And let's see. I am trying to do the trade for $19.70. So let's see if this gets filled. Just so you guys know, I am doing it on a separate computer and a separate account. So I don't show my trades. But I do show the strikes that I'm doing, and the trades that I'm doing, and so you can basically see what I'm doing to the best of most likely, so that you can get a handle on exactly what I'm trading, because I know it's complicated. So I bought 2 new calls, the 297 calls in Marvell, and basically adding to my position. Still long in Marvell. I love it. I love the stock, and just sticking with the trend. This market as a whole today, the way we have a uptrend today, and the way when you look at my watch list, there's just green. It's a sea of green. This type of tape action is so bullish to me. I think you got to kind of just go with it. We'll go back and pull up the S&P 500. The way we had this consolidation early in the morning, and then we had a pullback right after the opening bell, and we just keep going higher and higher. Even as we're in the midday part of the trading day, right around the noon, lunchtime hour, you would expect us to get some type of choppy consolidation action for maybe an hour or so before we make another move in a trend day like today. But we're not really getting that yet. We're 12 minutes into the lunch hour essentially, but we're not getting like we're not getting the halt in the midday chop that you would expect, and that to me shows that we got to keep going higher. Yeah, and you can see it in individual stocks. When you look at when you scroll down and look at these stocks, the way they're moving, there's so much green, and they keep going higher and higher. The percentage moves on a day like today keep going up. Look at that Rocket Labs. That's an interesting name because it had such a big pullback on Friday with the SpaceX IPO, and now it's bouncing back the way it is today. That's an interesting move. I like that. If I didn't put so much money in the other names, I may buy some calls at Rocket Labs. But I think because I bought the Marvell calls and I bought the Microcard calls and I bought the Robinhood calls, I'm kind of tapped out to a certain extent. So, but if you're looking for a new trade, I like the tape action. I just like the way it's bouncing back after the pull back that we had on Friday with the whole SpaceX IPO. And to me, it seems like people were selling Rocket Labs to take some money out to put it into SpaceX, and we're bouncing back, gapped up, and we're getting thrust up into the middle of the day. Looks nice, and what you can do is you can use this level right here, right at 105.80, where the low of the day, which is the low of the trading day, the regular session trading day. You can use that as a stop, and just stay long. And if we break above the day high, that is confirmation of bullish tape action. You stay long for the rest of the day, and then you stay long overnight as well. You can do it with stock, or you can buy at-the-money call options. And Rocket Labs, you can look at the options that expire on this Thursday, because there's no market on Friday. Friday is Juneteenth. There's no trading day. So this is a good trade here. Not too expensive. The $5.30. So you can buy these calls here, these 109 calls, or 110s. You can buy you can buy the 110 calls that trade for $4.80. And go for it. And if Rocket Labs takes out the day high, which is 110.62, hold those calls overnight and see what happens. So let's see what else we have going on today. Palantir, I like the way it's bouncing back. I talked about on Friday how Palantir is really looking like crap, so the fact that it's bouncing back the way it is today is a good sign. But if you look at the bigger picture chart, it's still it's holding some of the key support levels here, right at 126. So this bounce back today is nice, but I still want to see it keep going higher to confirm that it can go up. Its chart looks kind of weak to me, and the way that it reversed down over the past couple trade sessions, and that this down swing from this high to this low is bigger than this swing up from here to here, that's not too bullish in my opinion. Um, and, and it took out this swing low. That's not good. There's a lot of little technical action. It's not very bullish. It's not necessarily super bearish, but it's not confirmation to be bullish to the upside. So I would be cautious of Palantir. It's great tape action today that it's moving higher. Go back and take a look at that intraday chart. Very, very good, solid bullish tape action. But everything is up today, so you got to kind of put everything into context and understand that, yes, it's great that it's up 5% today, but everything's up today. Take a look at just above Palantir stock like CoreWeave. I mean, this stock is moving up today. It's acting very well. So everything is bullish and acting very well today. We are in a strong uptrending trend day. I discussed some stocks earlier, like Micron and Marvell. What else sticks out to me that is just ripping higher? Western Digital. Look at this. Look at this. Western Digital. So it's up even more than Micron on the daily. Huge move. Gap up higher. And as you can see, each dip, it's a higher low. That's the stuff that you look for to confirm that it's legit bullish tape action. And so what you want to see is us retest that high that we made early in the morning. And it may not happen. We may have to have that happen tomorrow. But you had a big move up early. We didn't take out that high yet. We actually have a lower high from the original high from the morning session. But you have higher lows. And so it's kind of like the market is finding a happy medium equilibrium point in the mid part of the session. And we're up huge on the day, up over 14%. So, and I would, if I was going to buy the stock, you can buy it here and you can use, like an intraday swing low as a stop. But look for the stock to take out these highs. And if it does, it trades up above this swing high and close to or above the high of the day, you got to hold that stock overnight. Okay. Now take a look at the options. They're very, very expensive. That's the problem with a lot of these options right now in these high flyers is that these options are so expensive. When I say expensive, I'm not talking about like just expensive on a per contract basis. Okay? Yeah, the stock is $641. An at-the-money call costs $2,800. Yeah, I get that. That's a lot of money. Especially for some people, it's a really lot of money. But it's expensive on a volatility basis. Look at this implied volatility. The stock has an implied volatility of 112%. The expected move is almost $54. That expected move with that high volatility is why the options are so expensive, because it's pricing in this big move in the stock because it's been running up so much. And what you're getting in these options is big call skews. These call options, these at the money and out of the money call options are skewed to the upside. They're more expensive than the puts. And that is not something that usually happens in individual stocks. But it's happening in this market. Specifically with the tech stocks, the semiconductor stocks, the AI stocks, and it makes it dangerous. Now, you can do. One great thing about options, when you do have a high volatility and a call skew in these stocks like Western Digital, is that you can buy a call vertical spread if you can, if you're allowed to buy options and sell options against those options that you buy. Not everybody's approved for selling options and doing vertical spreads, but if you are, this is a fantastic environment for that, because you can buy this option and close to at the money. In this case, the 637 call goes for $3,000 or $30 per contract, but each contract is equal to 100 shares of stock. So $30 call is equivalent to $3,000. But you can go way out of the money. Okay? You can go way out of the money. And you can sell an option against it and really cut that cost in half. Because if you sell, for example, like that's a 635 option. Let's look at the 700 options. The 700 strike Western Digital option, which is $60 out of the money. That option you can collect close to $7, and that makes the trade as a whole $30 minus $7, which is $2,300. It reduces the cost of the trade, and there's a good chance that you can actually make money on both legs. If you could, what I like to do sometimes is put on a spread, or buy an option. When I put on a spread, I'll manage each leg independently. I'll be right back. Gotta get all this. So I got lunch. Lunch is here. And I like to, what I was saying is I like to, when I buy a spread, an option spread, I like to manage each leg independently. So I may sometimes buy one option and sell an option, and it's buy to close the option that I sold, and then sell a new one, and buy that to close, and sell a new one, and all the while keep a call and hold on to that call that is bullish that I own, and continue to sell calls against it over and over and over again to try to reduce the cost. And that is a very profitable strategy in this market because of the call skew and the high volatility and the way that these stocks are running up like that. You can make a lot of money selling these out of the money calls. And in this type of market, you can sell them, buy them back, sell them again, and stay long the underlying call. And in this market, works very well. Now, that strategy is not the optimal strategy for all markets, but in this market, the way the tech stocks are running up and the way they have high volatility and the way they have call skew, where the calls are more expensive than the puts, which is very, very rare in the stock market. When you have individual stocks that have the calls more expensive than the puts. In that type of market, in this type of market that we have right now, call spreads are a fantastic strategy. Basically, you buy the at the money or buy an in the money call, and you sell the open and out of the money call. And like I said, you can, if not always, but if the market kind of goes sideways or has a down day, very often you can buy the close that call that you sold and resell a new one, and do it over and over again. And doing that constantly, grinding it out. That's what I do as a trader. I grind it out. I don't have stories where I'm a sensation, where I make like all this money at an option and go and buy a Ferrari or a Lamborghini. No, that's not me. I'm constantly just grinding it out, rolling options, adjusting my trades, collecting premium. Using that premium that I collected to buy another new call in something because I like that stock. And then, we have a sell-off. Okay, well, I'll sell some puts to get some extra premium on the put side. And hopefully, I get assigned shares. And I just keep doing that. And all that grinding, trading the options around the underlying stock that I own, that gets me the extra alpha, the extra percentage gain each month that turns into extra percentage gain each year, which then turns into a trading career where you have a portfolio of stocks that you own and then options that you trade around the core position of stocks that you own, and you just do that day after day after day after day after day. That's my game. And I shoot for 25 to 35% gains a year. Some years I do better, some years I do worse. That's my game. But if you can get many years of 25, 30% gains, you do that constantly year after year after year, it really compounds a lot. And on top of that, when I first started doing this when I was, in my early 30s, I lived a very meager lifestyle. I didn't do a lot of crazy things and spend a bunch of money doing stuff. I was always very frugal with my money. And now I have more money to spend on stuff. But the thing is I still just automatically am just frugal. I don't know how to break those habits, And I think that's going to continue into the future more. I will be a very disciplined individual and have a very frugal lifestyle. I had to push myself to go on vacation and spend some money and go to Vegas, which I'm going to do later this summer. But my brother was go spend some money, live life a little. When do you ever treat yourself? I'm like, yeah. He's right. So that lifestyle of being disciplined and being frugal comes from just being a grinder as a trader. I see traders that I saw some videos on YouTube, but they're actually shorts on YouTube. It is a trader. I don't want to mention any names, but this trader is in Mexico trading, and then she's like, "Oh, I just traded and made $12,000, and then the next day I lost $5,000 as I was on vacation in Mexico." but that was okay because it was within my risk parameters. I'm like, no real trader is getting in a plane, flying to Mexico, setting up their trading screens, and trading out by the pool, and then going to the beach. And it just doesn't work that way, okay? If anyone is doing that, my takeaway is that they're scammers, because real traders will grind away, be in front of the screens, and all the time, and then they'll go on vacation. They're not even going to look at the market when they're on vacation because they're so exhausted. They need a break from the markets. So if you ever see someone on vacation in front of screens trading and making a big deal about it, I think they're bullshitting, because a real trader, they'll go on vacation and they'll be on vacation. They need a break from the markets. So if someone's that constantly day trading and constantly trading, and they are trading and like flashy, showing that they're trading on vacation, I think that they're not legit. Because if they're a real trader, they would just be very eager to take a break and get away from the screens, especially if they're a trader like me, where they're grinding day after day after day. So that's just my take on it. I am the trip that I'm going on. It's not even a real vacation. I don't think I'm going to a conference in Las Vegas. So I am going to bring my laptop though. But I don't know. I'll try not to check the markets, but I'll probably have to. Bring my laptop and check the markets. But I'm not going to flamboyantly. I'm not going to be flamboyantly like out by the pool on vacation trading stocks. I'll be doing it quietly. If I check the market while I'm on vacation, I'll be doing it quietly in the hotel room. So if you see something like that, then I think that's legit. Because what gets me is that there's so many like scammers out there. There's so many scammers, and I just got a text from my buddy. He's like, it may be time to start building a Palantir position. He's a contrarian. I'm gonna text him. I'm gonna say I was just looking at Palantir. I think he likes the fact that it's bouncing off of those support levels and holding support. That's what he likes about it. So I hope that he's right. But what I'm going to tell him is, what I'm going to text him is, I still needed to confirm that it's ready to go higher. I want to see it go up a little more. But I think buying it, if it goes up to like 137, is a good price. I'll text him that level. I'm going to text him 137 right now. So that's a good price for Palantir. If it gets to 137, right about there, right below the 20-day, right there, 137. And let's take a look at the weekly chart. It's held in the lower Bollinger Band, and on the weekly 20-day is at 140. So 137 is a good price for both the weekly and the daily chart on Palantir. And I'm long-term bullish on this thing. I just don't like I said, I don't like the way the stock had a big reversal and it's back you know, test the support. It needs to prove itself. Uh, and my buddy just said it's below the 50 day. Let's take a look at another chart template to see what he has to say here. Yeah, so he says it's below the 50 day, and it is. Let's take a look here. See what he was saying. Shit. What he was saying was it's below the 50 day, and that's the pink line. And he's right. I don't think he likes it below the 50 day. His methodology is that anything below the 50 day is not worth buying. So I think he would like to buy it above the 50 day. I'm going to ask him what he thinks. Like, would you buy it above the 50 day? That's right at like 139. $139 to $140 is what I'm going to say. See what he says back. Because I own shares of Palantir for the long run. So, see what he says. And it's interesting, the 20 day is right below the 50 day. So that 138 to 139 level, I like it. I think it's a good buy. I just want to see what he says, because he likes to buy stuff when it's above the 50 day. So that's why, like, with the 20 day and the 50 day being right at 138, I want to see if he likes to buy at that point. I don't usually listen to what a lot of people have to say, but I suggest that you have a friend, you find someone that's at your level, that you like talking about markets with, and that's at your level, and like you can get ideas and stuff and talk about the markets with, and be brutally honest with them. Talk about your winners, talk about your losers, and make sure they're honest with you too. If they're not honest with you, you can't talk to them about stuff. I guess they're always talking about the winners and stuff. No. I got this sweet green chicken Caesar wrap. I've been eating that recently. I like it a lot. Well, I'm going to eat my lunch. Oh, wow. I think that's going to be it for today. I have some things I have to do later this afternoon. So I'll keep streaming. And I probably not going to be able to turn on the camera later today because I got some stuff to do. But I'll keep streaming for a little while longer today. Show my screen. It was nice talking to everyone today. I hope that I helped people. And I like doing this. I like doing this a lot. And I want to continue to keep this 100% free and give away the material, give away the content for free, because I think that, I don't know, I just think it's really cheesy and sketchy to charge money for financial education. Um, I think it's okay if you charge a small amount, but there's a big element or a certain amount, like a reasonable amount. But for the most part, I just think there's a sketchy element to charging for, lots of content, financial education content. And the reason why is because it goes back to that scene on The Wolf of Wall Street, where the guy that Matthew McConaughey uh, plays, he goes, "I don't care if you're Jimmy Buffett or Warren Buffett, no one has a clue what the markets are going to do." And I think Tasty Live, the way they created all that content and all that research and published it for free for all those years, really changed the game. And so creating premium content or something, uh, and, and selling it for a high price, I don't know. It doesn't fit right for me. So, and I like teaching like this, and talking like this. So I will talk to you guys later. Take care, everyone. Bye bye. Okie dokie. I added to my SpaceX position in stock. I bought, basically doubled down my position and added a little more shares than I had before at $182 a share. So my first purchase was 167. My second purchase is $182 a share. And that is after a clean breakout of the 175 level today. And it continues to inch up gradually higher. So I am continuing to be long SpaceX and double down on my position in SpaceX at this point. After that breakout above the previous day high of 175.